Today, Coinbase CEO Brian Armstrong responds to the Securities and Exchange Commission's charges against his company. The SEC pushes for an emergency order to freeze Binance US's assets. And Kavita Gupta of the Delta Blockchain Fund weighs in on whether more crypto companies will want to move overseas following the SEC's continued crackdown on the industry. Welcome to CNBC's Crypto World. I'm Jordan Smith. Major crypto assets seem to be shrugging off the SEC's clampdown of crypto exchanges Binance and Coinbase, which the agency sued for allegedly violating U.S. securities laws. As of noon Eastern, Bitcoin rose by 1% and Ether held steady, still trading above $1,800. Meanwhile, Binance's BNB token tumbled down more than 7% in the past 24 hours. Over on Wall Street, Coinbase shares were up nearly 2% as of noon Eastern. This as the company's third largest shareholder, ARK Invest, scooped up $21.6 million worth of Coinbase shares in the wake of the SEC's crackdown. All right, let's catch you up on the latest headlines. The SEC filed an emergency motion in Washington, D.C. federal court last night requesting to freeze the assets of Binance US around the world. SEC lawyers argue that Binance's main business and its founder Changpeng Zhao exert effective control over billions of dollars of client funds. The emergency order would also force fiat currency and crypto assets deposited, held, traded, or accrued by customers on the Binance US trading platform be sent back to America. Federal regulators said they don't have sufficient assurance over the safety of $2.2 billion of US customer assets nominally under the control of Binance's US subsidiary. Meantime, court filings from yesterday show that the SEC's investigation into Binance US started back in 2020. In a long tweet from Monday, Binance US said the crypto exchange had engaged with the SEC in good faith for nearly 2.5 years, adding that the lawsuit is, quote, baseless and unjustified by the facts, law, or the Commission's own precedent. Next, Coinbase CEO Brian Armstrong was on CNBC's Squawk Box this morning to address the SEC charges against the company he co-founded. During the interview, Armstrong said Coinbase met with the SEC 30 times over the past year and that the agency never provided feedback about what the company could have been doing better. He also called for clear crypto rulemaking. Take a listen.
The companies could really not be more different, and the suits could not be more different. So, in Coinbase's case, for instance, there hasn't been any allegation of misappropriation of customer funds. I haven't been named personally. The executives haven't been named personally. The complaint in the Coinbase situation is really a technical matter about, do you classify these as commodities or securities?
Now, SEC Chair Gary Gensler was on Squawk on the Street yesterday morning, where he argued that the trading platforms are, quote, commingling a number of functions which in traditional finance wouldn't be allowed. Last, crypto companies are considering a move offshore as regulators in the U.S. continue to clamp down on the industry. The New York Times reported today that as the U.S. becomes one of the strictest crypto regulators, digital asset firms are exploring plans to expand internationally and possibly leave the country entirely. Coinbase, for example, secured a Bermuda license in April, a few weeks after receiving a Wells notice from the SEC. And about 2 months ago, crypto exchange Bittrex announced it was shutting down its U.S. operations. All right, for our main story, we're sticking with the push from digital asset companies to move overseas amid the SEC's crackdown on crypto exchanges. I spoke with Kavita Gupta of the Delta Blockchain Fund today for her insight on that and Bitcoin's apparent resiliency amid the current backdrop. All right, Kavita, I feel like I always come to you when things are sort of going wrong, from FTX to the banking crisis and now this latest crackdown from the SEC. So let's just start with your reaction to these lawsuits. How bad is it for Binance in particular, and how bad is it for Coinbase in these separate but similar cases?
It's first of all, it's always funny, Jordan. We are always talking about every time there's a disaster, whether something has disappeared or it's been SEC, and it's SEC again. I think I look at it in a very interesting way because, one, at least now I completely agree with what Brian Armstrong said, that let's see what is the clarity on regulations going to be. The biggest problem of this whole thing has been that SEC has never given a guideline. It has never said that, hey, these are the rules, abide by it. If you don't, we're going to come after you. It's just like, hey, we are thinking about some rules. We are cooking something in our head. And based on those uncooked rules, we are going to come and sue you. Even in this report, suddenly out of the blue, 12 tokens in one report and 13 tokens in one report, one case, are securities out of the blue, right? And there's no explanation why they are security. There's no thought process given to it. And why only those 13s? Are there more to come? Are they going to come up with the list or the qualification for securities? No idea. Then the same thing is about staking, right? And so initially everybody claimed that the Kraken staking project was because they were mixing a lot of different type of stakings in it, different token staking in it. But now they have not really explained, is staking itself is an issue here, or is it again mixing the multiple tokens into staking? So I feel like because of these lawsuits and these open hearing, either Congress will have to now participate and say, hey, if you are alleging someone that they are wrong, what are going to be the basis of that wrong? So overall, for the industry, I feel like this is just going to take us towards more clarity. And that's why you see that Bitcoin and ETH have actually bounced back. You didn't see them really going down. There are no, like, Binance news did make the industry, especially the altcoins, go down by around 8 to 10%. But then you suddenly see the strength of 4% coming up, or like the Bitcoin actually going up 27K, right?
Yeah, I'm glad that you brought up the market's perspective on this, because that's what I was going to ask you next is, I mean, we did see a sell-off in crypto broadly. I think altcoins were hit particularly hard as there were questions around, whether they're securities or not. But Bitcoin has remained relatively resilient. It seems like investors are looking past this. Does it add to that sort of narrative that we've had so far this year that, Bitcoin seems pretty safe? It seems to be treated as a commodity by the SEC. It seems like it's going to weather whatever this regulatory crackdown in the US will be.
Yeah, I think Bitcoin, Ethereum, even if you look at ETH, it has stuck around 1,800. It hasn't moved a lot because of any news, though ETH is not mentioned, which everyone was expecting ETH to be mentioned along with all the other tokens. But even in the altcoin tokens, if you say, the movement of, let's say, Solana or Polygon has been pretty much what the movement in the market has been. It doesn't look like a specific news has really taken a Matic price or a Solana price to an extreme level. So I just feel like the market is like, oh, the more people I have talked to in the space, they're like, yeah, it was long time due, just waiting to see what's going to happen. But that doesn't change anything with respect to business as usual.
There was an article in the New York Times about how companies are looking to move overseas in the wake of this crackdown that's been going on in 2023. And it's something we've heard from people who have been on Crypto World as well. Do you agree with that notion? And if you do, what's the sort of next hub for crypto? Is it in the Middle East? Is it in Singapore or Hong Kong?
So this has already been happening for last year and a half. More and more companies, especially if the company has any token associated, even as an investor, a question would be, where are you based out of? And they always would say outside US. But what we started seeing more and more in last 6 to 8 months is that they would say, we will not give access to our tokens or our services to the US citizens. So that started becoming a more of a thing where, like, oh, so how many people are we missing on these services? More and more exchanges started saying, whether it's OKX, KuCoin, Gate.io, that for US citizens, they won't provide their services, right? So the business continued to be as usual. The only people who are suffering seems to be the US citizens or people who are still living in US, because all the services, whether it's exchange, whether it's DeFi, whether it's staking, are available everywhere around the world. Coming to your second question, I don't think there's going to be one hub. Lisbon continues to be a big one for the developer economy. Singapore continues to be one. Dubai, of course, for big traders. The whole Polygon is based out of there. We are seeing multiple places all over the world. We are also seeing South Korea and Japan for the metaverse and gaming industry on blockchain becoming a big one. And recently, I was in Paris, and there was a huge push by the government to have a lot of blockchain development and trading being happen there. So I feel like this is a loss at the US end, and a lot of other countries are actually gonna capitalize on it.
There was a point that was made. This is my final question. There was a point that was made in the New York Times and a few other places that this will be a years-long battle. What does that ultimately mean for investors? Do they avoid these sorts of tokens? Do they stick to the Bitcoins and Ethereums and DeFi platforms? How do investors look at this environment right now?
I think if you are an investor, which is a US investor and have no foreign feeder fund, which most of the funds do, then you are stuck. Then you probably have to sit down and think. But most of the funds and companies in the space already are based out of somewhere else. So I don't think there is going to be a major difference with respect to that.
Okay, before we go, a California court will move forward with a case claiming Kim Kardashian misled crypto investors with her Ethereum Max post on Instagram. According to CoinDesk, the judge ruled that Kim K's posts were false and misleading. Other celebrities, including Floyd Mayweather, were accused of misleading investors as well. Now, back in October, Kardashian agreed to pay more than $1 million to settle SEC charges against her. That's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.